Hi, I'm Ian McGugan of the Report on Business. I'm here today with my colleague, Kawa, who I've recently learned has become an oil bull. Can you explain what's got you optimistic about the outlook for oil?
This is against my better senses, and it clashes a bit with something we discussed recently, which I was quite bullish on the US dollar. One of the biggest factors informing my newfound bullishness on oil is the growing realization that I have to take a mulligan on that to you. The US dollar is looking pretty weak, and I think it's set to take a breather. So that's one big factor. And another is US oil production. We've become accustomed to talking about those big oil inventory builds at Cushing. Last week, big inventory build. Less people noticed US oil weekly production actually declined. I think that might be the start of a new trend.
Sure, but let's look worldwide. I mean, there's tons of excess capacity in OPEC. We've got even the possibility that Iran is going to sign this nuclear deal, and there's going to be 1 million barrels a day of output from them coming on stream.
It's not like these barrels are going to get unleashed tomorrow. This is going to take time. There's a good outline to that deal, but I think there's still a lot of things to be ironed out before we see that really become a factor in the supply-demand balance in the market. One of the big factors also providing a little support for the price of oil is the crack spread. So that's the gap between the price of crude and the price of gasoline. That's been above the 5-year average for quite some time, had a big spike in the past couple of months, and we're heading into a season which refiners are incented to, in anticipation of the summer driving season, to draw down on those inventories and really create more gasoline. And they're being incented even more to do so because it's more profitable.
Sure, but I look at the futures market, and we both know the difficulties of using the futures market as a predictor. Still, though, you look at the implied volatility, and the futures market seems to be saying that, over the next couple of years, oil will be somewhere between $30 and $100. In other words, it doesn't know.
I think the futures market is a bit skittish. And over time, we've seen the 5-year out future from the beginning of the year. It's gone from pricing at about a little over 70 US for WTI 5 years out to 65. So the futures market has been growing increasingly more bearish on the long-term outlook. And in the near term, I think we've seen these very positive signs.
Perhaps so, but I've got to ask, if you're so optimistic about the outlook for oil, are you loading up on oil stocks?
That's one thing I cannot bring myself to do. The valuations, especially on Canadian energy stocks, I believe the forward price to earnings for calendar year 2015 is north of 60. That's not something I can buy into. Might I take a look at ETFs that track the price of crude oil? I might have my eye on that.
When I look at how quickly new supply can come on stream and the amount of excess capacity that we have in OPEC, I just don't see the case for any near-term rise. It's tough to fight the momentum we've seen over the past few months.
Hey, Ian, to beat the market, you got to be a little different, and I'm willing to be a little different on this.